Hi, thanks for checking out this video before we have our next session. I'm just going to go through some basic definitions because different companies have different contract language with different definitions for different terms. So I want to just go over some basic terms with you before we go into our next session. So what is disability insurance? It's a contract between you and an insurance company that will pay you a certain amount of money per month if you become sick or hurt and are not able to work in your profession. What is true own occupation? True own occupation is a definition of a disability contract where you will get paid as long as you cannot do your specific occupation. So if you're a specialist, even if you can become a generalist, you want to be able to get paid. If you go back, let's say you're a physician and you can go back to a medical school and be a professor, you still want to get paid. That's the definition of true own occupation. The next definition is monthly benefit. What is a monthly benefit? That's the amount of money that is paid to you by an insurance company. If you buy your own policy and pay with after-tax dollars, you will also receive the benefits tax-free. This is the way that we would recommend you purchasing a disability policy. The next one is, what is a claim? A claim is when you are sick and hurt and you cannot work in your own profession and you are asking the insurance company to pay you this benefit. That's what a claim is. Next, cost of living adjustment. Cost of living adjustment, or COLA, is an inflationary rider that you can add on a disability policy. So if you are on claim and you're getting a certain monthly benefit in the first year, and you're still on claim after that into the second year and third year, you would expect that this policy and this amount is being increased by the cost of living adjustment. That could be 3%, it could be based on an index. Different companies define it differently. So the next definition is premium. What is a premium? A premium is the cost of insurance that you're either paying monthly or annually to keep the insurance policy active. What's a waiver of premium? A waiver of premium typically happens when you are on claim and receiving benefits from an insurance company. Some companies will waive their premiums and you do not have to pay during the time that you are receiving benefits from that insurance company. The next thing I'm going to go over is elimination period. What is an elimination period? You might hear the term elimination period or waiting period. I consider it to be the deductible for a disability policy. It's the amount of time that has to pass before an insurance company will start to pay benefits. Most people will choose a 90-day elimination period. And what that means is that they will have to wait 90 days after their illness or sickness or accident before the insurance company starts to pay. That doesn't mean that you should tell me that 90 days after this happens. You want to tell me as soon as possible if you think that anything is going to keep you out of work for a period of time. But that's the waiting period. So if they have a 90-day waiting period, they can expect that the insurance company will pay starting from day 91. The last definition I'm going to go over is partial disability. What happens when you're back at work, either part-time or full-time, and you're still losing income? Partial disability is a rider that you can add to a disability policy that they will pay you benefits if you are losing some sort of income and you don't have to be out of work 100% of the time. That's what a partial disability is. Thank you so much, and I look forward to meeting you in my next session. Talk to you soon.